that I'll be using today or demonstrating to you today. So just know that the information I'm sharing today is specific to 2020. There may be some slight variant changes from year to year, and that's where I encourage you to visit our website, SocialSecurity.gov, to see some of those changes that may occur. But what I'd like to do today is provide a general overview of the benefits we administer. So specifically, we'll be discussing information about the Social Security retirement benefit. We also have a benefits for spouses, surviving spouses, individuals with disabling conditions. We'll also talk about Medicare, and be aware that Medicare is a separate agency, a separate entity from Social Security. However, the initial enrollment into your Medicare Part A and B when you reach 65, or under different circumstances, and we'll talk about those, is you contacting Social Security either through our website or a local field office and applying for Medicare Part A and B through Social Security. And then at the end, we're going to have plenty of time for questions and answers. And what I'd like to do is, as I'm presenting, if you have a question on a particular topic, or we don't cover a topic that's of interest to you and you still have that question, if you'd submit your question via chat, and we're going to monitor that chat box throughout the presentation. At the end, we're going to go through that chat box and read the questions, and I'll address them together. So let's go ahead and get started, and we'll start by talking about Social Security retirement. How do you qualify or become eligible for Social Security retirement benefits? Now, as you begin your employment history, and notice I'm not saying your career, we're using the term employment history, you're concerned with acquiring what are called credits. And these credits can be accumulated at any point in your life, but generally speaking, the beginning of your work history, you're concerned with acquiring credits, because in a lifetime of employment, having that Social Security FICA tax withheld from your wages, you only need 40 credits, which is equivalent to about 10 years of employment in which FICA tax is withheld, to be vested or promised a future Social Security retirement benefit. So again, this is most important at the beginning of your work history, and we're including wages from when you worked part-time, maybe even prior to high school or during high school, through high school and to college, or even after, before you started your career or during your career. During that point, you're accumulating those credits towards retirement. And for a reference, to acquire one credit in 2020, that's you and I grossing earned income through employment, having that FICA tax withheld from the first $1,410 in 2020. So if I was starting my work history and I have yet worked 10 years and I am shy of those 40 credits, if I gross $1,410 in 2020, I add an additional credit to my 40 credit count, or towards that count. There is a 4 credit cap per year. So if one credit in 2020 is equivalent to grossing earned income through employment, having that FICA tax withheld from $1,410, you reach that 4 credit cap in 2020 when you gross earned income through employment of $5,640. So again, fairly low threshold. You're going to reach that figure working part-time, minimum wage within the year 2020. You're going to accumulate those 4 credits, the 4 credit cap per year, to put towards the 40 you need in a lifetime of employment. And once you've worked, equivalent to about 10 years of employment, paying into Social Security FICA tax, you're vested. You reach the 40 credits, you're promised a future Social Security retirement benefit. And from that point forward, you're then concerned with how much will my monthly benefit be based upon my work history of paying into Social Security. We take a 3-step process to determining your individual Social Security full retirement rate. So if you were filing for retirement and claiming those benefits in 2020, we would go through the 3 steps. And the first step would be, we take all of your past wages and we adjust them for inflation, or for today's values. And once we've adjusted your prior years of employment to today's values, we move to step 2. And our system interacts with your IRS earnings record through you filing taxes, and our system identifies the highest 35 years of your employment history. And for someone who's worked only 45 years of paying into Social Security, we're going to use every year you contributed. For someone who's worked more, let's say you worked 40 years or more, an example that you worked 40 years, we will exclude the lowest 5 and include the highest 35 of your 40. And for someone who is vested, worked and paid into Social Security a minimum of 10 years, so you have the 40 credits, but less than 35 years, we're going to use every year which you contributed. And if I only work 30 years, for example, there may be 5 zeros in my Social Security retirement calculation. And the result of that is I'm paid proportionally to what I paid in. So if I've worked fewer years of paying in than someone who's worked more, my benefit rate may be less. Same with someone over the same 35-year period. If they are a higher FICA tax contributor over that period than myself, who may be a lower FICA tax contributor over the same 35 years, then our benefits per month will vary depending on how many years I paid in and the amount at which I'm contributing FICA tax over those 35 years. Once we've identified your individual highest 35 years, we move to step 3. And step 3 is identifying what's called the average index monthly earnings. And this is what's specific to the calculation based upon you bringing your highest 35 years to the calculation. In step 3, the term average index monthly earnings, what that's referring to is of your previous high 35 years, for which FICA tax was being contributed through employment, what is the average amount you grossed through employment per month over that high 35-year period? And once we identify that, your individual contribution into the Social Security full retirement rate formula will be the step 3, including or adding your average index monthly earnings. Again, what's the average amount you gross per month through employment over your high 35 years? And again, we add your individual average index monthly earnings into our Social Security retirement full retirement rate formula, and that produces your full retirement rate at your full retirement age. And we're going to look at the next slide when our individual full retirement ages will occur. But know that this formula we use, it's automated. So if you contact a local office and say, could you let me know what my expected benefit rate will be at full retirement age, either 66, 66 in some months, or 67. We put that information in an automated calculator. It produces a benefit estimate. You can obtain that same estimate on our website, SocialSecurity.gov, called a retirement estimator. And I have a screenshot of that, of our homepage, I should say, one of the last slides that we'll be viewing, and I'll point out where that retirement calculator is. But know that we use a formula that's applied to everyone, and what you add to that full retirement rate formula is your individual average index monthly earnings. That's how we produce an individual full retirement rate. And you're going to hear me use the term full retirement or full retirement rate because that's a particular age or birthday month plus additional months you must delay claiming a benefit in order to receive 100% of that benefit paid to you. So on the slide that I'm showing, on the left-hand column it says year of birth. If you would find the period of years you were born or the specific year you were born. And when you've identified that row, move across that row from left to right. So the right-hand column is going to show your individual full retirement age for the purposes of receiving 100% of your Social Security benefits claimed at this particular age based upon the year or period of years you were born. And again, that range is either 66, 66, and 2, 4, 6, 8, 10 additional months, or at the very bottom of the chart, that last row, it says 1960 and a plus symbol. That means those who were born January of 1960 through today, those 5 to 6 decades, which I fall into, and if you're with me, our full retirement age is 67th birthday month. So now that we know how our benefits are calculated. We know when we're due 100% of our benefits and where we can claim those benefits and draw them back out. This is one filing option. You have the option of still claiming a Social Security benefit before or after your full retirement age. So let's look at the monetary effect of if you choose to file before, at, or after your full retirement age and what that has on your monthly benefits. And I apologize, the slide's frozen. I'm going to click it again here. Okay. Yes, so we're caught back up. I apologize for that. The slide you should be viewing now is a bar chart. And this bar chart was created to illustrate the monetary effect of when you choose to file, what that has on your monthly Social Security benefits. This is an individual decision, one that I am not here to guide or lead you into that decision. I'm here to give you information to empower you to make the best financial decision for yourself. So this is just informational purposes. But we mentioned in the previous slide, and we identified that full retirement age is significant because that's when we're due 100% of our contribution based upon the three-tiered Social Security retirement calculation paid back to us. But you have the option of filing before or after that date. So on this chart, it's illustrating your options. You can file as early as age 62, regardless of when your full retirement age was in that previous slide, or you can delay as late as age 70. So your range to file for retirement benefits would be 62 to 70. For the sake of very simple math, I added monetary figures above each of those bars that correspond with various ages on the slide. They do not represent statistical averages of what we pay at these ages. They're meant to represent the simple math or the cause and effect of when you choose to file, what that has on your monthly benefit rate. On this slide, we'll assume that our fictitious full retirement age is age 66. It's right in the middle of the slide, $1,000 per month. Regardless of when your full retirement age was on that previous slide, we can all file as early as age 62. But notice in this example, and this is true for all of us, by filing before our full retirement age, we're agreeing to take a reduced monthly benefit rate. Because the assumption would be in an average lifetime expectancy of men and women, mid to late 80s, depending on the source you look at, but for the sake of example, we use mid to late 80s. In an average lifetime expectancy, if I choose to file before my full retirement age, let's say 62 for $750 per month, over a lifetime, I may receive more months of a Social Security retirement benefit, but it's going to be at a lower rate per month. And what this chart does not illustrate is every month in between you obtaining these fictitious ages. So if I'm 62 today and I'm eligible for $750, if I delay into August and September and October, and I'm 62 in 2 months, 3 months, 4 months, months in between to 63, 64, 65, up to my 66th birthday month, the process would be every month you continue delaying or deferring enrollment into your retirement, there's less reduction applied and there's more benefits due to you per month. That's early retirement. You file before your full retirement age, you're agreeing to take more months of benefit in an average lifetime expectancy scenario, but at a lower rate. If you choose to file and delay, you're not claiming the benefit through 62, 63, 64, 65, and let's say you turn 66, our fictitious full retirement age in July of 2020, you could submit an application and receive 100% of your highest 35 years contributing into Social Security, drawing that back out. per that three-tiered equation we viewed and putting that into our Social Security retirement formula. And in this example, I'd be due $1,000 per month. But that's at full retirement age, and perhaps I would like to continue deferring enrollment. I'm in a financial position that I would like to delay claiming the benefit. I don't need it, frankly, or I'm still employed and have a desire to continue working. You can continue deferring or delaying enrollment into your Social Security retirement benefit beyond your full retirement age, and every month in this example, between 66 and 67, through 68, 69, up to 70, every 12 months beyond your full retirement age, your benefits will now increase by 8%. So if I filed for benefits prior to my full retirement age, we're reducing your benefit rate. If I choose to file for benefits after my full retirement age, up to age 70, every 12 months after my full retirement age, that particular month going forward, it goes up 8%. So in this example, by delaying 2 years from 66 to 68, it's now increased by 16%. From 66 to 69, it's now 24% higher. And if you can delay those 48 months, 4 years in this example, up to age 70, where the benefit is capped in value, it no longer increases by you delaying benefits. You file at age 70, you could capture that 32% increase in monthly benefits that is in excess of your full retirement rate would be 4 years ago in this example. So you have the option of filing anywhere between 62 and 70. We receive many contacts, phone calls, inquiries to local offices. I'm sure Durango is no different, about the public wanting to know when to file, thinking that Social Security employees have a kind of an inside scoop on this whole process. The truth is that it's an individual decision, meaning what your brother, sister, cousins, relatives, friends, neighbors, dentists, whoever's telling you when they chose to file, that may have been the best decision for them, considering their personal health situation at the time, or their personal financial situation at the time, or their employment situation at the time. So that being said, do your due diligence. I will point out where the retirement calculator is on our website towards one of the last slides. You can run the calculation for yourself and see financially what benefits you're due. If you need assistance in making that decision, Social Security cannot advise you when to file. We can give you the cause and effect of what age you choose to file. That produces a corresponding benefit rate. But our involvement with this process is enacting your wishes. So if you contact Social Security asking for advice, we can't tell you that information because we don't know your personal information. So that's where doing your due diligence, understanding your financial situation, health situation at the time that you can file, making the decision that works best for you is going to be your best option. Anywhere you decide to file between 62 and 70, you can file within 3 months before or the month you wish the benefit to begin. So let me give you an example of that. Let's say I was obtaining full retirement age July of 2020, this month. I could have filed 3 months before, so back in April, effective July, 2 months before, May, effective July, last month, file in June, make it effective July, or 1st to the 31st of July, I can submit an application, making the application effective in July. Whenever you decide to file for your own Social Security retirement benefits, you are locking in that rate. So in this example, if I file at 62, in an average lifetime expectancy, I may receive more months of payment at a lower rate, but my benefit, barring cost of living increases, will remain near that $750 value. As I age to full retirement, it does not jump up in value, it stays the same. So that's another factor to consider, is when you choose to file and receive your Social Security benefits, you're locking in that benefit rate the rest of your life. Again, excluding a cost of living increase, which is granted by the U.S. Labor Department. Another question we get quite frequently in local offices is, can I continue working through employment while drawing a Social Security benefit? And the answer is you can. However, there may be a effect on you continuing employment while drawing your Social Security benefits if you choose to file for benefits under full retirement age. And it's something called the earnings limitation. So we'll go through this slide and I'll try to be as thorough as I can. On the very top row, it says under full retirement age. That's where an individual files to claim a Social Security benefit who's either 62, 63, 64, 65, not in the year January through December which they're obtaining the full retirement age, but the prior years. If you choose a reduced benefit, you're drawing that benefit and you go back to work or continue to work, and in 2020 you gross more than $18,240 through employment, we take the value that's in excess of that, we take half, so 1 for every 2, you're in excess of the $18,240 value, and that is a penalty to your monthly benefit.
Wow. Meaning,
just like kind of a hose or a water spigot, we may turn off your benefits for a number of months until that penalty is recouped, and then you become eligible for payment for the remaining months of the year.
Wow.
The middle row is when you're within the calendar year of your full retirement age. You can gross significantly more income through employment. It's $48,600 per year. And we may, if it's more beneficial to you, use a monthly test. So we take that $48,600 per year. I'm sorry, does someone have a question? Oh, no. If everyone could please mute your line. I think I was getting some feedback. Thank you. So in the middle row, when you're within the calendar year of your full retirement age, you're not yet to that specific month, but it would be, again, the scenario that in July of 2020 is my full retirement age. This would be January to June. You can grow significantly more. It's that $48,600 per year value, or we'll do a monthly test and take that value divided by 12 and apply for each of those months leading up to your full retirement age attainment. In the event that you're in excess of the earnings limitation within the calendar year, the months leading up to your full retirement age, we're going to use a third. So 1 for every $3 you're over that value. Maybe a penalty and may make your benefits be subject to suspension. But the very bottom row, it says month of full retirement age and above or beyond. Once you reach your full retirement age, that specific month in the rest of your life, there's no longer an earnings limitation. There's no longer a penalty that's placed or deterrent that's placed on you drawing your Social Security benefits and continuing employment. So there are individuals who delay up till their full retirement age drawing a Social Security benefit. They may be full-time employed. You can, at that point, in your full retirement age month or beyond, claim 100% of your Social Security benefits and continue working. And there's no deterrent or penalty based upon your employment and drawing that benefit at full retirement age or beyond. And I want to reiterate the $18,240 per year and the $48,600 per year figures. Those are applicable to earned income through employment only. We are going to exclude or not count against you income from a 401k disbursement, a 401a or 401b, a pension disbursement, sale of a second home, lottery winnings, inheritance, dividend income. If I'm missing any other source of unearned income, it is excluded, meaning we're not using that in the earnings limitation. What may affect your ability to continue receiving your benefit uninterrupted would be if you file for benefits before your full retirement age and you continue employment or go back to work and gross more than these earnings limitations for 2020. So that's Social Security retirement in a nutshell. Again, a brief overview, but a nice transition from retirement to additional benefits that we offer is the Social Security spouse's benefits. And that's because when two individuals are in a marital relationship, so we have spouse A and spouse B, spouse A files and claims their own Social Security retirement benefits. That action makes spouse B eligible for half of the retiree's benefit per month without it affecting how much we pay the retiree. Individuals who are filing as a Social Security spouse for half of their retired spouse's benefits, if they were born after January 1st of 54, you must file for your own retirement before claiming your spouse's half benefit. And I'll have an example of that on the next slide. Just like your own retirement, as a spousal beneficiary, you can file as early as age 62, but just like your own retirement, if you file and claim a benefit through Social Security before your full retirement age, that benefit is going to be reduced. So if you file at 62 for a Social Security spousal benefit, the benefit's going to be reduced. If I was a Social Security spousal applicant and I wanted to receive all of the half benefit made available to me from my retired spouse, I, as the applicant, would delay until my full retirement age to claim all of my spouse's half. Just like a current spouse or current marital relationship, if you had a prior marriage that lasts 10 years or longer, and you as the divorced spouse are single, you'd not remarried or are not remarried currently, you can file for divorce spousal benefit. And that gives you the same rights to file for half of your former spouse's retirement without it affecting how much we pay the retiree or their current spouse. So here's an example of a typical spousal application. We have Kelly. Kelly's own full retirement age rate is going to be $800 per month. Kelly's spouse or ex-spouse has a full retirement age rate of $2,000 per month. So this tells me that Kelly was the lower wage earner and Kelly's spouse, ex-spouse was the significantly higher wage earner, thus producing a higher benefit rate. But Kelly would like to pursue their spousal or ex-spousal benefit. As I mentioned before, we pay half of the retiree's benefit to that spouse or divorced spouse. However, Kelly was born after January 1st of 54. That means Kelly must file for their own $800, then file for the $1,000 made available as a spouse, ex-spouse. In Social Security, when we're paying beneficiaries, we pay the higher of the two benefits. We do not pay a sum total of a spousal benefit plus your own retirement equals a sum of 1 plus 2 equals 3. It is the higher of the two benefits available to you. So in this example, Kelly files for their own retirement of $800, also files for the $1,000 as a spouse, ex-spouse. We pay the difference between the two. So Kelly will keep all of their retirement and $200 will be supplemented to Kelly, bringing their monthly rate up to $1,000 as a retiree and claiming some spousal, divorce spousal benefits. So again, we do not pay sum total both, it's the higher of the two. In this example, when Kelly's own retirement is less, the difference between the higher of the two and their own is supplemented in the form of a spousal, divorce spousal payment. If the scenario were to change slightly, and let's say Kelly's own full retirement age contribution resulted in a monthly benefit of $1,200 per month. Kelly's still meeting requirements to file as a spouse, ex-spouse, and may choose to do so. But because Kelly's own full retirement age rate is $1,200, that's greater than the $1,000 available as a spouse, ex-spouse, there'll be no additional benefits payable. So if your own retirement is greater than a spousal, divorce spousal benefit, you keep your own retirement. When your retirement is less than another benefit, the difference between your own and the other benefit supplemented in the form of a spousal, divorce spousal payment to you, bringing your monthly rate to the higher of the benefits applied for. So this is a living scenario. We have the retirees living, files for their Social Security retirement, that action makes their current spouse available. Divorced spouse may choose to file as well. Everyone's living. The benefit rate's capped at 50%. Heaven forbid the situation were to change and the retiree or the spouse were to pass, then we have a survivor benefit payable to the surviving spouse or surviving divorced spouse. So in a deceased scenario, we're able to pay 100% of the full retirement rate of the deceased individual to their current spouse or to their former spouse. A difference between a survivor benefit and a living benefit, I mentioned in a retirement scenario, in a divorced spouse, current spouse scenario, everyone's living, you can file as early as age 62. However, in a survivor scenario, the surviving spouse or surviving divorced spouse can file 2 years earlier, as early as age 60. However, if you choose to file as a surviving spouse at the earliest possible age 60, we're going to in turn further reduce that benefit payable to you because you're filing 2 years, 24 months at a younger age or further away from your full retirement age as the applicant. So if I become a surviving spouse and I'm widowed and I want to receive all of my deceased spouse's full retirement rate, it would be me as the applicant delaying to my full retirement age before claiming that benefit. But in, statistically speaking, based upon average life expectancy, many of us are not going to go down this path per se until we're far beyond full retirement age purposes for drawing a benefit through Social Security. So at that point, it would be of the deceased and of the surviving spouse who had the higher benefit rate. And if the deceased had the higher benefit rate, the surviving spouse would be eligible for the difference between the deceased rate and their current rate. If the deceased had the lower benefit rate of the surviving spouse, there'd be no additional benefits payable because the surviving spouse had the higher of the two earnings records. If you find yourself in the position that you're receiving Social Security disability or you're dealing with Social Security disabling conditions, and we'll address on the next slide what that may look like for you. If you're approved and receiving disability benefits, you can file a decade earlier. If you become widowed, as early as age 50 or in your 50s. If you're caring for a minor child of the deceased who's under the age of 16, there's additional benefits payable we make available to that surviving spouse or to that minor child where a parent were to pass away and that surviving child loses that parent at a young age. I mentioned before that surviving divorced spouses have the same rights as a current marital spouse to receive a survivor benefit. Requirements would be, as a surviving divorced spouse, you had a prior marriage that was 10 years or longer, and you're single at the time you file. However, as a surviving spousal beneficiary, if you're widowed and you choose to remarry before the age of 60, it would preclude your ability to draw your surviving spousal benefits. If you choose to remarry after attaining age 60, it preserves your ability to engage in a new marital relationship while being able to draw off of your former relationship as a surviving spouse. There is another difference that I want to bring to your attention between a survivor scenario, surviving spouse, surviving divorced spouse, and a living scenario with a living spouse and a living divorced spouse. That being, in a living scenario, that first bullet I mentioned was that if you were born after January 1st of 54, you're required to file for your own retirement before pursuing your spouse's or divorced spouse's half benefit. And the effect of that is, and we saw with the example Kelly, is that you're going to claim your own retirement and you get the difference between the higher of the two. And you're essentially claiming both benefits at the same time. You don't have the option of filing for one and deferring on the other. In a survivor scenario, you as the surviving spouse have the ability, if you've yet to claim your own retirement, to defer your own enrollment into Social Security retirement and claim a survivor benefit at a reduced age. When we mentioned surviving spouse, surviving divorced spouse, you can file as early as age 60. You don't become eligible for your own retirement until 62. So a scenario may look like I become a widow, my spouse passes away, I'm eligible as a surviving spouse. I may choose to file as a surviving spouse and defer enrollment into my own Social Security retirement contributions till a later date. Because as I age from 62 to my full retirement age, my Social Security retirement increases to full retirement rate. And I understand that from my full retirement age to age 70, my benefits continue increasing in value, in which they're capped at age 70. So if I become a surviving spouse, I have yet claimed my own retirement, I may choose, and you have the option to, claiming a reduced survivor benefit and deferring enrollment into my own retirement until which date either I obtain age 70 and my own contribution is capped in value, or my own retirement produces a greater monthly value than what I'm currently receiving as a surviving spouse. And in that scenario, when you're prepared or you choose to file for your own retirement benefits, you submit a new retirement application to Social Security. We process the application. We then begin paying you off of your own Social Security earnings record as a retiree, and you're no longer a surviving spousal beneficiary. So again, much more information on our website, SocialSecurity.gov, about survivor benefits, but just be aware that's an option you have that in a living scenario, current spouses and divorced spouses do not have. One must file for both. In a living scenario, in a surviving scenario, you can choose to file for one, defer enrollment into the other, and allow your own to accrue in value. We talked a little bit about how children fit into this scenario in the scenario where a parent of a minor child were to pass away and there's benefits payable to that surviving spouse and that child. But a child, according to Social Security standards, is an heir of yours who's under the age of 18, full-time attendance to school, and unmarried. And if you age into the range 62 to 70, filing for your own retirement benefits, or you become eligible and draw a Social Security disability, which we'll talk about next, that action from a parent or either parent of that minor child makes them eligible for half of a parent's Social Security or disability monthly benefit without it affecting how much we pay that parent. So if I have a minor child, I age 62, I choose to claim reduced benefits, and my son is under the age of 16, full-time attendance to school, unmarried, they can continue drawing half of my retirement benefit without it affecting how much I am paid per month. If you have a disabled child who is dealing with physical or mental conditions, we determine that they're eligible for adult standards of disability before the age of 22. They will continue receiving a portion of a parent's contribution through a disabled child's benefit beyond attaining age 18 or graduating from high school. And depending on the severity of the condition, whether it limits their ability to rejoin the workforce or join the workforce, they may continue receiving benefits off of a parent's record the rest of their life. I mentioned a little bit about disability. I want to cover it now. Adults over the age of 18 who have a physical or mental impairment, that their condition or conditions, could be singular or plural, is expected to last 12 months or longer or may result in their death. This is long-term disability opposed to short-term. And your condition or conditions limit or prohibit your ability to work up to what's called a substantial gainful amount. And in 2020, that would be, can I generate earned income through employment up to a rate of $1,260 per month? And if my alleged disabling condition is visual impairment or blind, that threshold is a little bit higher. It's $2,110 per month. So if I have a disabling condition, it's affecting my ability to either maintain employment or go back to employment, or perhaps a physician or doctor, based upon the severity of my condition, recommends that I can no longer continue employment. That's when it's pertinent to contact Social Security as soon as possible. We will assist you in completing the application. We'll send it for a medical decision. Again, when you have that long-term diagnosis, 12 months or longer, and it's affecting your ability to work and earn per month, $1,260. Again, far more information on our website, or feel free to contact your local office for additional information about filing for or the application process for Social Security disability. Final topic we'll talk about, and we'll get to your questions, would be Medicare enrollment. Again, Medicare is a separate entity, separate agency. However, Medicare assists the public with the initial enrollment for Medicare Part A and B. And these are the 3 Medicare enrollment periods on the screen. We'll go clockwise. So at the top, it's the initial enrollment period. That is for the public 3 months before the month you turn 65 and 3 months after the month you turn 65. So a 7-month period in which you first gain access to enrolling or your eligibility to obtaining Medicare Part A and B. Individuals who are currently employed, taking advantage of your employer's insurance, or you're covered under your spouse's insurance and they are currently employed, engaging in their employer's insurance, may choose to defer enrollment in Medicare beyond age 65 to what's called a special enrollment period. So that occurs for individuals who are now older than 65, but from 65 to the current date they wish to enroll in Medicare, they were currently employed taking advantage of their employer's insurance, or that is your spouse's arrangement and you are covered under your spouse's insurance. When you enroll in a special enrollment period, you're older than 65, perhaps you don't wish to file and receive Medicare Part B and pay duplicate premiums per month when you or your spouse are already receiving insurance through employment. So you defer up until you separate employment or you drop your employer's insurance. That is when a special enrollment period begins. So you drop your employer's insurance, you separate employment, you have a new enrollment window to obtain Medicare Part A and B after age 65. Now, if I do not file for Medicare Part A and B during the initial enrollment period, I do not file for Medicare Part A and B during a special enrollment period, or I just don't qualify for a special enrollment period, the only other opportunity I have to gain access to Medicare would be during the general enrollment period. And that's every January, February, March. And if I enroll in the general enrollment period, my Medicare does not begin until that same year's July. So there may be months of lack of medical coverage until my benefits begin. And for individuals who are older than 65, enrolling in the general enrollment period, there is a 10% premium penalty added on for every year you're older than 65 for Part B. So if I enroll during the general enrollment period at age 70, I'm 5 years older than 65, my Part B premiums will be 150%, opposed to the base rate of the 100% of that premium. We'll look at that right now. For Part A, it's hospital insurance. It is free. There's no premiums. Part B is medical insurance. It does have the premium, and I was referring to that in the previous slide with the penalty. The base rate or standard monthly rate in 2020 for Part B as in boy is $144.60. This rate is specific to 2020. We don't know yet if that rate will change going into 2021, but it may. So kind of check back with us on our website or Medicare's website for any changes to Part B premiums. There's also Part D, and Part D is Medicare prescription drug plans. This part of Medicare, Part D as in drug, is where you're contacting Medicare directly for enrollment. Part A and B of Medicare, you're contacting Social Security for enrollment. If you wish to add assistance with prescription drugs through a drug plan, you're contacting Medicare directly for enrollment into that plan. Ways to contact Medicare is through a website, 1-800-MEDICARE, or through their website, Medicare.gov. So the phone number, 1-800-MEDICARE, you type it on your touch-tone phone. You end up leaving off the E on Medicare, but it still helps you remember that phone number. And the website's very helpful as well as you go through which prescription drug plans may be of benefit to you, or which you'd like to switch from, because they have open enrollment or general enrollment plans that you can change plans from year to year. Do want to mention that Social Security is aware that many individuals in the community may be receiving fraudulent calls or calls from individuals who are impersonating Social Security representatives. We encourage you not to engage with anyone who's threatening by phone. I've gotten these calls where someone reported to be with Social Security, which I find humorous since I work for the agency, and they say that the police are on their way to arrest me for an outstanding warrant. And the way that they can resolve the warrant is if I give them my Social Security number and some other personal identifiable information, they'll clear it up for me. So again, I'm amused by it because I know it's a fraud, and I hang up. There are individuals in the community who do fall prey to this kind of fraudulent, threatening tact. So our advice to the public is, if you are uncomfortable on the phone, please hang up. If you don't recognize the number, let it go to voicemail. If it's Social Security giving you a call, we will introduce ourselves. We'll give you our name. We can give you our phone number and extension. So if you prefer, you can call us back and conduct business. In very rare instances do we reach out to you by phone. Generally speaking, we send you a letter, and we encourage you to contact us for information. But if you have a pending or outstanding application or claim, we may contact you by phone before sending that letter. And again, Social Security is not going to call and threaten you. We cannot incentivize you, provide personal information by increasing your benefit rate, for example, because we all know now your benefit rate's tied to your highest 35 years of employment history. So ways to report some of these fraud calls to help us understand the messaging that's out there to warn other community members, as well as we do seek prosecutions of individuals who seek Social Security fraud. We have a fraud hotline number shown on the slide, as well as additional information protecting your identity, identitytheft.gov. Ways to interact and conduct business with Social Security. 3 options in no particular order. However, you have the option of visiting our website, SocialSecurity.gov, for additional information of all the benefits I discussed today. You can file online for all of the applications or benefits I discussed today, with the exception of one being a survivor benefit. So if you choose, you can file online for a retirement benefit, a survivor benefit, a divorce spousal benefit, disability benefits, Medicare benefits. Same application, you can file online 24/7 at the convenience of your home. Second option would be giving us a call. We have a national 800 number listed. When you call that number, it's available per your particular time zone. So the Mountain Time Zone, it's available from 7 a.m. to 7 p.m. Monday through Friday. You will call someone within the United States, and you will speak to a Social Security employee. We can answer general information by the 800 number. We can also schedule you an appointment to a local office if you wish to file an application with the assistance of a local office claims specialist. Third option would be contacting your local office. However, due to COVID-19 and social distancing, local offices throughout the country are closed to in-person contact. So we are still operating in the capacity that we can assist you by phone, and we can take the same application through a phone appointment. So if you're interested in receiving that assistance in your application process, please call our 800 number to schedule an appointment with your local office. And then at the agreed upon future date and time, a field office representative will call you and conduct the application by phone opposed to in person. Last slide, and we'll go through some questions if you have any, is a screenshot of our website, SocialSecurity.gov. And a few areas I want to bring to your attention. The very top of the screenshot, our web page, on the left-hand side, it's an icon and our title, Social Security. On the right-hand side, there's a search and menu feature. This is where you will view additional information about all the benefits we had time to discuss today. We have examples of scenarios, more information about particular benefits, how to file for that particular benefit. Great information. Again, I provide a very quick summary, thorough summary, but for more information, please visit our website on benefit-specific information. Lower left-hand side of our web page, there's a hand with a finger out clicking a blue button that says My Social Security. This is where you will log in or create a unique username and password and gain access to your Social Security earnings statement. This is a very powerful financial planning tool because it shows all of your past Social Security work history. It gives you an updated account of what your future Social Security retirement benefits would be at age 62, at full retirement age, at 70, what a current spouse, divorced spouse, surviving spouse could receive off of your record, what a child could receive or children could receive off your record if you become disabled. A lot of great information in there that helps you to, again, do some financial planning for the future. If you have a My Social Security account, you can replace your Social Security card online if you have a valid state ID or driver's license. And the final thing I'll point out, we'll take any questions you have, is the retirement estimator. It's a teal circle, blue circle with a calculator in the middle. That is where, by opening or gaining access to your My Social Security account, you can transcribe your Social Security earnings history from 1 year into the corresponding year into the retirement estimator. You will choose a future month and year between age 62 and 70. You hit calculate, and it will give you a benefit estimate for that specific age between 62 and 70. I think it's a great financial planning resource. You know, be familiar what your benefit rates will be at the desired age before you file for that benefit. That is all the information I had to share today. Appreciate everyone's interest. If I could ask Rita, did we receive any questions, or if you have any questions, please submit them in the chat feature and we'll address them together right now.
Hi, Josh. We have several questions. Do you want me to read them, or are you going to take a look at them?
Could you read them to me, please?
Yep. Okay, first question is, I'm widowed at 64. My husband died at 0, maybe that's 70. Can I claim his spousal Social Security now?
So as a surviving spouse, you claim survivor benefits, and you can claim at any age between 60 and your full retirement age, depending when you were born, 66 through 67. So yes, you may choose to claim, draw those benefits now for 64, but do remember the earnings limitation is still applicable. So if you are not yet full retirement age, you draw any Social Security benefit and you gross more than the earnings limitation for 2020, that may affect whether you're payable for every month that year or going forward until your full retirement age. But to answer your question, if you're 64, you can absolutely claim your survivor benefits from your deceased spouse.
Okay, next question, spouse benefit. Is this if the spouse is alive or deceased?
I believe so. I guess for Alan.
So for a spouse, it's a living scenario. So to draw a spousal benefit, the retiree would be living and drawing, and you as the applicant, you're either married to that individual or your divorced spouse 10 years or longer. You can draw that benefit, and it's capped at 50%. And again, that's when everyone involved is living. You're eligible to draw as a spousal beneficiary.
Okay, next question is, Must the child with the disability have applied for disability before age 22?
So the key there is, can we find them, meaning their eligibility date, were they medically examined, medically determined to be disabled prior to the age of 22? And when we take a Social Security application for disability purposes for that disabled adult child, we're going to go back and is there evidence that we can take the onset date back that far? And regardless of that child's age, we would encourage you, and they'd be adult, I suppose, instead of a child, but your child's age, we would have them still file because there may be different disability benefits we can provide them. So we're kind of getting a little bit deeper in the weeds for disability, but I would still encourage that individual to submit an application for Social Security disability and to try to draw off of a parent's record.
Okay, next question. It's a little bit lengthy. So it says, I turned 66 in March 2020. I am eligible to collect Social Security now, but have not yet started taking it. What is the time limit to request Social Security after turning 66?
So if you turn full retirement age, I'm going to assume that's what occurred in March 2020, then you can file any month you wish to claim your benefit between now and when you turn 70. Once you reach 70, we mentioned before, your benefits capped in value. There's no need to delay beyond that point. So for yourself, use the retirement estimator, contact a local Social Security office by phone or call our 800 number. If you have a target retirement date, let us kind of share with you projected benefit rates, what you'd be due, and then you make that decision anytime you're comfortable. But you're eligible to receive your retirement benefits between now and age 70. And just know that if March of 2020 was your full retirement age, you're going to be due more than that full retirement rate because you've delayed claiming the benefit thus far.
And then there's a part two to that, his question. Is there an advantage to collecting Social Security as soon as one is eligible? Example, being enrolled and collecting Social Security will shield one from possible negative changes to Social Security in the future.
Sure, and that's we're kind of on the edge of speculation because Social Security, the agency, and myself included, we don't set our policy. Any changes would be through our legislators. So I couldn't tell you of any changes that are imminent or may occur or might occur in the future. So again, that goes back to that personal choice and what you're comfortable with. Individuals who file at a younger age or early retirement, they do so for personal reasons specific to them. And if you choose to continue delaying up to age 70, again, I think that's a perfectly logical thing to do if that's what you choose to do as an individual and it meets your desires for increasing the monthly benefit for financial reasons or your health is adequate that you choose to delay filing. And again, it makes sense for you. So I couldn't speculate on any changes that may occur in the future. However, be comfortable with your own decision because, as I mentioned before, once you file, you're locking in that benefit rate the rest of your life.
And Josh, there's been several folks that have asked, will a copy of these slides be available? So is that something that you can send to me and I can disperse to everyone or not?
Yeah, Rita, and I appreciate everyone asking. Unfortunately, we don't distribute the slides because they're specific to 2020. And we've had instances in the past where individuals rely on this information. It becomes outdated and they're making long-term decisions based upon outdated information. So what I encourage you to do is visit our website, SocialSecurity.gov. And all I did on the slides was the information from specific benefit pages was summarized and it was placed on the PowerPoint slide so it's easily presented. But if there's interest, Rita, we can do refresher training next year. If there's any changes, I'd be willing to come back and share those with everyone.
Got it. Thank you. Okay, so next question. says, I am confused about the windfall elimination as it relates to possible spousal benefits, collecting Social Security and para benefits. Who can I contact in my area?
Yep, great question. And for those who are unfamiliar with what the windfall elimination provision is or refers to, that's where if you've had prior or current employment and your employer did not withhold FICA tax from employment. So example would be a lot of educational institutions, they pay into a separate pension from Social Security called para. And when you draw your para, you draw Social Security, the windfall elimination provision may reduce your Social Security benefits. I recommend contacting the Durango Social Security office, and we will be able to walk you through the monetary effect of that WEP may have on your Social Security benefits. So please contact the local Durango office. The way to obtain their contact phone number would be if you go to our website, SocialSecurity.gov, and the search feature, there's an item on our website called Office Locator. It'll prompt you to put in your zip code, which will bring you to the Durango servicing area, and they have a general inquiry phone number. So instead of calling the 800 number, where you may be answered in a call center, certainly feel free to contact the Durango office, explain your personal situation, and a representative would be happy to walk through the effect of WEP on your future Social Security retirement benefits.
Okay, next question. How do I pay taxes on Social Security benefits?
Great question, and the answer is you may. It's more of an IRS issue, but we are aware within the Social Security Administration that depending on your other forms of income that you're claiming on your taxes, it may make your Social Security benefits subject to your tax rate. And either 50% of your Social Security benefits would be subject to your tax rate, or 85% of your Social Security benefits received in a given year would be subject to your tax rate. I encourage you, when you get closer to drawing the benefit, talk to a tax advisor, let them know your financial situation, because we do have the ability, when you contact the Durango office, to send you a form which you can elect to withhold federal taxes within certain percentage before we distribute your monthly benefits to you. So just like employment, you can have a part of your benefits held back to meet that liability for that federal taxation. And the state of Colorado may also apply a state tax to your federal benefit. Not every state does apply a state tax to Social Security benefits. In states that do have varying percentages, but I am aware that the state of Colorado does. So again, going back to maybe wise to contact a tax preparer, tax representative, have that discussion with them, and you can contact the Durango office once you've filed and elect a federal tax withholding percentage, so it mitigates or reduces that taxation that's applied when you go to file at the end of the year.
Okay, and this looks like the last question, Josh. So they are asking, oh wait, there's another one just popped up. Okay, so this question is, do both spouses receive Social Security benefits, or just the one with higher income at retirement age?
Sure, so retirement benefits are specific to your own or an individual's contribution to employment. So I'm in a dual income household. My spouse and I, we've contributed to Social Security since we were in high school, working part-time jobs, and now we're in a career or work history's progressed beyond that point. And when we go to file, we're going to make individual decisions to draw our own retirement before pursuing each other's half benefit. You may be eligible for some of your spouse's retirement through a spousal benefit if your own retirement is less than their half. And we looked at that example with Kelly. Kelly is always going to draw your own retirement, but there were additional benefits payable because there was a great discrepancy between one spouse's income versus the other. So an example may be if one spouse does not have the opportunity to engage in the workforce, the same capacity duration as the other spouse, then their own retirement may be less than half of the retiree's spouse, the spouse that worked more, contributed more. So there's additional benefits payable. But in the example with my spouse and I, we have comparable incomes. We're going to have a comparable duration of employment. I happen to be older, so when I filed for my retirement first, making my spouse eligible for my half, because we're born after January 1st of 54, my spouse, chances are, won't draw any of my spouse's benefit paid to them because their own contribution, their own retirement is going to be greater than my half. And that's fairly common with dual income households. Chances are your own retirement is going to be greater than your spouse's half and vice versa. But in the event that it's less, we pay the difference, and that's where the spousal benefit comes in after paying you your retirement contribution.
Okay, one more question. Can you collect Social Security disability if you own a business, or do you have to be completely unable to work to qualify?
So self-employment, we do have different requirements when we are examining your ability to work and earn a certain amount. We may look at the number of hours you're working opposed to the amount of income you're pulling out of the business for compensation. In that scenario, I would still encourage you to contact Durango, your local office, to pursue that benefit and let us go through the application with you and identify whether you're eligible or not. Because what I've seen in the 10 years that I've worked for the agency is individuals may assume that they're not eligible, and they go many years without payment, and they could have been drawing that benefit and not knowing they were eligible. So I don't want to give anyone the impression that they're not eligible. I would prefer that you contact the Durango office, have that discussion, individually explain your scenario and see if you're eligible. And if you are, by all means, it's your choice, but you may choose to file for that disability application, even though you are self-employed.
All right, Josh, I think that's all the questions we had. So thank you so much. What a lot of information for us to ponder.
Yeah, you're very welcome, Rita. And I appreciate, again, everyone's time and attention. For additional information, please visit our website, SocialSecurity.gov. And I hope everyone has a great rest of your Thursday. Thank you very much.
Thanks again, Josh, and thank you everybody for attending.